I think, we started the year with, twin deficit problem, whereby the major concern was on the runaway nature of the current account deficit, where we had seen, imports surging ahead, led by unproductive items like gold in particular, and that actually caught the attention of the policymakers. We saw current account deficit go as high as 6.7 in one of the quarters, and has remained consistently higher than the comfort zone of the RBI and the government, it being at somewhere close to 2.5 to 3%. So this year that has gone by did see trade deficit numbers being alarmingly high, particularly led by, as I said, high gold imports. Because of the policy issues, India's manufacturing sector was importing more coal than warranted. The oil prices kept the oil import bill fairly elevated, and some of the manufacturing sector issues also compelled us to import more than was warranted in the manufacturing sector items, as a result of which we saw the trade deficit numbers zoom in the first quarter of this year. Though I have to add here that it was probably, acting with alacrity that the government and the Reserve Bank of India put forth very strong hindrances in terms of gold imports, as also, began to ease some of the hurdles, particularly related to the coal imports. And, as suddenly the issues related to the current account deficit, particularly trade deficit, have begun to ease very alarmingly, and not alarmingly, I think very quickly. And I think, the estimates, which were ranging somewhere between $85 to $90 billion as we started the year as a current account deficit for the full year, have been corrected very sharply by almost all analysts, including ourselves. Our current estimate for the full year for current account deficit stands at about $60 billion, with downside bias, which basically is tantamount to saying at about 3 to 3.2% of GDP. Definitely a very impressive improvement, I would say, from what we saw last year at 4.8%, and as we close the year closing at about 3% or 3.2% is, I think, definitely a much creditable kind of achievement. Though I would like to add that efforts need to carry on in improving the structural nature of the trade account. We definitely need to pay more than adequate attention on reviving our domestic manufacturing capabilities. We definitely need to bring down our inflation so that on a sustained manner, so that gold imports are not necessarily attractive and they do not provide very strong positive returns, so that the demand for gold would naturally begin to ease. So there is a lot of homework to be done to bring about a structural positive nature of current account deficit remaining within the 2.5 to 3% range. But till such time, I think we would be happy to see the CAD numbers coming in much lower, thanks to the speed with which the policymakers acted on various stress points. Very quickly coming on to the fiscal deficit, I think no two ways about it that we do see a very strong commitment from the finance minister on adhering to the fiscal targets, particularly as they have a spillover impact on high government borrowings, keeping interest rates elevated, not to mention the concerns of the rating agencies. It's therefore very important to maintain a fiscal discipline. With a weak economy, no doubt it's going to be a challenging task to maintain that number at about 4.8%. While we have little doubt on the ability of the finance minister to maintain that 4.8, perhaps what would be of larger concern to us is the quality of fiscal adjustment in this year, because there are compulsions. We have seen weak economy translating into lower tax revenue, the weak equity markets for a large part of the year, not allowing government to embark on its disinvestment program. There were some delays in telecom spectrum auction announcements as well. So these concerns will definitely have a role to play in some of the potential risks of the fiscal deficit being breached. On the expenditure side, as I said, the subsidies is something that we really need to work hard on in terms of freeing the fuel pricing to the extent possible. In the very near term, it being an election year, it probably may not be an easy task to undertake, but India needs to look and think structurally and not just short term, because unless and until we cap the subsidies, we are going to be utilizing the most precious resources in an unproductive way, and that's not what makes for a good economy. I think we definitely need to sort out our fiscal arithmetic in a more meaningful manner, and it would involve hard decisions, it would involve sticky, difficult processes, but I think the bottom line is that it would pave way for more sustainable growth. So fiscal deficit as a headline number may not be a concern, but the quality of adjustment is something which probably would get compromised. But given the kind of concerns that have been raised by the rating agencies and also domestically in terms of the risk of crowding out, I think adhering to a 4.8 was first and foremost a most important job at hand for the finance minister.